Good morning, everyone, and welcome to the European crossover webinar. And we've just got some data come across, which is the market manufacturing final PMI across the Eurozone, which came in at 51.8. You can see that here. We about 10 minutes ago, or actually 5 minutes ago, we had the German manufacturing PMI come in at 51. They were expecting 50. And then prior to that, we have French market manufacturing PMI coming at 52.4. These are actually outperforming a little bit here from what the Reuters poll was expecting. Then we had Italian manufacturing PMI coming at 51.9 versus 51.2. And lastly, like I said, the Spanish manufacturing PMI also outperforming, coming in at 53.5 versus 52. At the bottom of the hour, we will have UK manufacturing PMI. So these have actually come out a little bit better. Seeing the euro continues to pare back a bit. We actually, bear with me. The euro's trading relatively quiet itself, and cable's picking up just a bit overall. We do have UK manufacturing PMI at the bottom of the hour. And coming to the States at 9:45 Eastern, that's when we'll have the market manufacturing PMI as well as construction spending at 10 a.m. Eastern, along with ISM manufacturing. That probably should go and move the market some here, ISM manufacturing. And you can see the euro trading relatively quiet now. This actually just on a 2-hour chart, but trading relatively quiet. Same thing here with the cable, but trading a little bit firmer here on the cable. Taking a look at the Aussie dollar. Working lower here with the Aussie. We've actually seen this since last week. You can see here we had a little bit of a hangman, and actually prior to that we had a little bit of a almost like a gravestone doji. We climbed back only to post this like little minor hangman. From some, we've actually gone and paired back since then, trading in at 71.25. And just a little bit firmer pricing here in the Kiwi, but the Kiwi is actually paired back, had a decent pair back, and then we'll take a quick look at the peso. And this has actually turned around a bit, and we're pushing, we continue to push it further. Actually, made up here in the 22.40. So we've had a nice rebound when we were trading sub 22 and finally started pushing higher. And since we've gone and pushed in 22.20, if you remember, that was our resistance, and we'd come back, paired back from that, and reassert ourselves. And then into Friday, we pushed higher, closed above that area, and look, we've even added on to that gains, making it up to 22.40. And actually a pretty nice recovery, continued recovery here in the dollar yen here. Pushing up here to 640. I think that's right around here is where we have our bias chart resistance. We'll get to that later. And then lastly, we'll take a look at the dollar index. Relatively quiet. And then take a look here in the indices. Same thing here, quiet overall. Resistance for the S&Ps comes in at 3282. And the NASDAQ, we're just pressing up here once again here at this 10,951. You can see we've rebounded just a little bit, but it's been trading a relatively quiet session. But we're still pressing right up here, right against this 1051 here. And crude oil found some support. We had talked about that in or at least I posted that in the chat room, that actually saw some support come in here at this 39.73. That actually did hold, and my concern was that as we saw equities improving, that we would see a bid come out of that. And so I think the low on this was like 39.68, and then from there we moved all the way up here. You can see the 40.40 before we come back and pair back, going back into that same area. Yeah. Take a look at the gold. December gold is now the front month contract. We're trading at 1991. There was a potential we could have pulled back a bit, but when the dollar came under pressure, that's when Trump was tweeting about delaying the election. Dollar came under pressure after finding a little bit of a rebound. Remember, at the 93.17, I think at the time we had rebounded a little bit, and after retesting that in the overnight session, and we're trading, I think, around 93.39. And then he came out with those tweets, and then that really put the dollar under pressure and really slid, and that really opened the door, and gold turned around and just started moving with that, and went the other direction. And I think at the time we'd climbed like $30 off of the lows, and then we saw this push. And then coming to Friday, nobody's going to stand in the way. We have cleared 2,000 in the Asian session, paired back a bit here. And we'll take a look at the news. Dollar wobbles as investors grow anxious about the pandemic toll on the U.S. economy. The U.S. dollar gave up brief early gains on Monday as mounting concerns about a slowing U.S. economic recovery from the coronavirus pandemic hobbled the currency after a brief rebound last week. The euro traded almost unchanged at 17.68, coming off lows of 17.41, touched earlier in the session, although it's still more than a cent below Friday's two-year high of 1908. The common currency hit a speed bump on some technical signs of being overbought in the near term, and with speculators' long positions hitting a record level, said Minui Ichido, chief currency analyst at MFUG. But the dollar's decline is likely to continue. Real U.S. interest rates are declining even as the country is running a big current account deficit, a situation we hadn't had for a long time, he said. And you can see here, U.S. bond yields have fallen to their lowest levels since the pandemic-induced turmoil in March, with the 10-year rate slipping to 0.5%, undermining the yield attraction to the dollar. U.S. bonds looked even less attractive when adjusted for inflation expectations, with the yield on inflation-protected U.S. Treasuries falling to a record low below 1%. The dollar changed hands at 105.90 yen, giving up early gains to 1644, which traders saw as an extension of Friday's rebound from a 4.5-month lows of 419. Investors have reason to worry about the U.S. outlook as policymakers have so far struggled to clinch a deal to pump more money into the world's largest economy, even as expanded unemployment benefits worth about $75 billion per month and accounting for nearly 5% of personal income expired on Friday. White House Chief of Staff Mark Meadows said on Sunday he was not optimistic on reaching agreement soon as a deal for the next round of legislation to provide relief to America's hit hard by the coronavirus outbreak. A growing U.S. fiscal deficit to finance the stimulus prompted Fitch Ratings to revise the outlook on the United States AAA rating to negative from stable. While the market has not shown immediate reaction to the downgrade, it still marked a sharp contrast with the European Union, which got a lift from Standard and Poor's decision to upgrade the rating outlook to positive from stable. Sentiment on the euro has improved after the European Union leaders agreed last month to €750 billion economic recovery fund, which also taking on a debt jointly in a major boost to regional cooperation. The deal could be conducive to a shift to the euro at the expense of the dollar among the managers of official currency reserves, said Zach Pandel, co-head of global exchange at Goldman Sachs. Prospects for the euro and reserve portfolios are looking brighter. In particular, EU's new recovery fund addresses two fundamental reasons that have held the euro back, which is the internationalization of the single currency and the macroeconomic stability due to limited fiscal transfers and a shortage of highly rated liquid bonds. Some traders speculate the dollar's decline since last month has been so big that it may have been driven in part by the reallocation of official reserves. Traders also keep an eye on intensifying tensions between Washington and Beijing on many fronts, including trade, technology, and geopolitics. Over recent days, Trump has threatened to ban TikTok, a popular video app run by China's ByteDance. And on to gold. Gold surged to a record high as virus fears lift safe haven demand. Gold prices surged to all-time highs lifted on Monday as fears of economic fallout from the rising COVID case boost demand for the safe haven metal, although gains were capped at an uptick in the U.S. dollar. The sentiment across the markets deteriorating. First of all, rising infection rates are a real concern to the globe and a real support for gold prices, given that it also is driving the U.S. dollar higher. Coronavirus cases continue to surge in the U.S. And stood at a 17.96 globally. Rising COVID cases and simmering U.S.-China tensions, the swift economic recovery driving inflows into safe haven assets such as gold, which climbed 30% so far this year. Gold also saw safe haven demand for the federal unemployment bonus expired on Friday, which would affect U.S. consumer income and spending. U.S. lawmakers struggled to hammer out a new stimulus plan, and White House Chief of Staff Mark Meadows said on Sunday he was not optimistic on a near-term deal for the coronavirus relief bill. Limiting gold's advance, the dollar index is 0.3% gain against its rivals, making bullion expensive for holders of other currencies. You can see right here. And with that, we're just going to move on into the analysis. And just pulling up the bias chart. So the euro finished the week paring back from Friday's 119, capping a 2-week run of nearly 700 pips. Support comes in at 1717, which is down right here, with resistance coming in at 1845. So is this off? And resistance at 1845. And moving on to the cable. Cable, after a strong blistering run, finished the week with a gravestone doji. You can see that right here. After such a strong run, there is a potential to pare back. Support's going to come in at 29.45 with resistance at 31.42. So potentially we're looking back for a move back down here at 29.45 with resistance at 31.42. Still holding up very well, 31.42. And let's go move into the Aussie dollar. So the Aussie closed at a new high post FOMC, albeit shy of 72 even. Resistance will be 72 with support at 70.83. 70.83. I think we were actually looking for a little bit lower move. I don't know if that saved that from the previous one, because we were actually looking for this potential to move lower. And we'd be looking here down, potentially down to 70. I don't know if we're going to get there today, but that's where the support. There is some support coming right there where we came up with, but looking for a little bit further move, and we're not pushing any further up here. I prefer 70. And on the upside, I could like this right here coming in there, and that's going to be 71.80. So the Kiwi slid on Friday to close at the lows of the week. A correction appears to be in the offing with the initial support coming in at 65.71 with resistance at 66.74. There we go. So 65.71 for support. And 66.74 for resistance. And move on into the dollar CAD. The dollar CAD continues to attempt to base out above 33 even. Support remains 33.40 with resistance at 34.70. So you can see that's going to come up here at 34.70. Let's move this all the way right there at 34.70. And we support still holding out if we do make that dip down here, which is going to be 33.40. Kind of in a little bit of a no man's land currently. I don't think we're going to push down that far, but to only offer 33.70, we could easily quickly test some stops. So 33.40, I think, is going to continue to be key and will hold, but on the upside would be 34.70. So the dollar peso closed a week above resistance level 22.20. We showed that earlier. Let's see right here. The next challenge for bulls will be 22.54 with support are going to be at 22.12. So 22.54 on the upside for bulls. Resistance with support at 22.12. And on to the dollar yen. The dollar yen closed slightly lower within a confirmed range. Support remains okay. Now that's, I don't know why I did not say that. It really ticks me off. But you can see here we had our resistance here for 647. Because that's not the text for the end of the week. But we had a resistance level right here at 647. Hence what I was saying earlier, that's pretty close to what we have resistance at the beginning of the show. And support is going to be right there at 562, which is a little bit lower than we're at right now, but I adjusted that for that 647. So once again, it's going to be 562 on the downside. And onto the cash dollar index. The dollar index saw a rebound to close the week. Resistance will come in at 93.91. You can see that coming in right there. Support will be 93.17, followed by 92.93. So resistance at 93.91 and support at 93.17. And that takes care of the majors. Let's go and move into the cross rates. And we did just get UK manufacturing came in at 53.3. You can just see what kind of reaction we got there just now. We're just a hair above 30 right now. Well, actually, not a hair. We're actually 30.90, coming up on 31 here. Not a whole lot of movement off of that. We were moving higher if we just came into the new 30-minute bar. We are still on the sell mode as far as the exponential moving averages. Moving back on to the Kiwi yen. So Kiwi yen closed fractionally higher on Friday, near the mid-range for the week. Resistance will be 70.56 with support at 69.52. Trading relatively quiet here, though. You can see here within a real tight range. See it right here on the 2-hour chart. Very, very quiet. Let's go and move on into the euro yen. Euro yen reached resistance level 25.06 before paring back a bit to close at 24.65. Resistance will be 25.06 with support at 24.01. You can see well within this range. We're kind of stuck up there, but we did get a very, very nice push up here on Friday. Onto the euro on. So the euro is slightly closed above resistance level of 64.79. This level ahead for the bulls to be challenging, or the next level, I should, the level ahead for the bulls to be challenging would be 65.81. You can see that right here coming across. Two consecutive closes above that would put the bulls in control of momentum. Support will be 63.41. So you can see the significance here of this 65.81. Two closes above that would put the bulls in control of momentum. And support is going to be 63.41. And onto the Euro Kiwi. The Euro Kiwi continues its upside break, closing at the week's highs. You can see here, resistance will be 78.80. You can see here coming into, that's a pretty key value level or key volume level that we saw quite a bit of movement here. And with support is going to be 76.24. And this is actually pretty strong, providing a strong upside support because, as I mentioned, look how far we've come. But I think right now with the Kiwi under weakness, the euro still firm, this 76.24, I guess the best way to say is it's a bit generous on the support side. You would think that the support would actually come in a little bit lower, probably down here. But this is, for it to close above and still gain. We're going to go with it. We'll stay with this, or not stay with it, but it'll be this 76.24, although rather generous for support. You would think it might be a little bit lower, is what I was trying to say. And resistance is 78.80. On to the Aussie yen. So the Aussie yen closed higher for the week, opening a possible challenge of 76.35, which will be resistance. Support will be 74.85. And on to the guppy. The guppy saw a strong run on Friday, challenging key level 38.72. Resistance will remain 38.72 with the possibility of it pairing back for new longs to step in with support at 36.34. So you can see here we've come back and we've actually made another run or go of it here at this 38.72, but it's been a pretty strong week for cable, not for cable, for the pound overall. I think we may see a little bit more of a pair back to allow some longs to step in. I think they would step in around this 36.34. It may not be today that we see that, but once again, this is a pretty good level here at this 38.72. That will be resistance. And on to the sterling odd. I don't know why this didn't save it, but resistance is going to be right there at 84.03. Boy, it's already had a pretty good run here. Look at this. But resistance will be 84.03. Still remains bearish, but if we can get above that 84.03 with two consecutive closes, it'll really start to put the bears in command. Support is going to be right there, 82.21. but still remains bearish. And that'll wrap it up for FX. Look at some of these other not other pairs, but other markets. You can see Facebook did close up and actually held, and 250 was key, and above that, Amazon, and I could go into some notes on some of these that are just interesting or looking further out as far as what we need to go and do in some of these markets that I'll be looking at myself. Bear with me. So I was taking a look at Google, and once we got past the earnings, it was actually a pretty weak close if you look at this. We did hold the trend line, but you can see here, pretty key here, and this is what I'm going to be looking forward out for these key stocks that hold the greatest percentage as far as movement here for the NQ. So take a look at Google. A bit of a disappointment here. Poor close on Friday, closed on the lower side of its range, which is 1493. You can see here to 1538 with solid support at 1440, but the next support here is going to be 1463. Apple, well, that's really taken off here. We can open that up real quick. It's the start of the week. Very, very strong close. Obviously, they're going to do that 4-for-1, so it's really opened this up and it's really pushing quite strong. So don't expect this. Not looking for this to pair back, but that's certainly one of the strengths here. Why we're still seeing the NQ still relatively strong. Taking a look at Microsoft. Higher close post earnings, but still looks weak to a certain extent here. Daily resistance level is going to be 214. It's going to be 214 here on the daily resistance level. It did close above 202, which was key, and support's going to be 195 down here. But once again, still not too thrilled with this close here. I mean, it's still positive, but once again, like I said, thought we could have done a little bit better. But the key was that it did hold the 202. Taking a look at Amazon. Overall bullish, but does need to get above 32.52. That resistance is going to hold there, with support's going to come in at 30.83. You can see that here. Looking at the 2-hour chart, though, it did post a gravestone doji here. And you can see we saw a pretty good pair back once we got that gravestone doji. So these are the things I'm going to be looking at. I guess on a 2-hour chart, you'd be looking at resistance around 32.20. Some of the things once again, like I said, that the concern I think this week is going to be the negotiations regarding unemployment benefits. And I think that it's open to maybe being a concern that the NQs could be open to a pair back. I think we'll probably be okay, I think, for today. but it's certainly things I'll be looking for as far as weakness. But I think for the start of the week, we'll be okay there. Um, Facebook came out okay. Intel's in bad shape, really bad shape. We close again to these new lows, and then looking here at Netflix. Overall, above the trend line, within that range of 467 to 516. The 2 hour does need to get back above 508 to generate some upside momentum. A break below 471 would turn this thing bearish. So that's looking at a 2 hour chart. But you can see here, still holding up above this trend line. But once again, it's certainly doing better than some of the others from a technical standpoint. Obviously, we're still strong, but I'm talking about a very short term where, once again, you get one, a little bit lower close here, and next thing you know, 2 consecutive closes below this trend line, and now you put it in jeopardy. So those are the kind of things I'll be looking at. My concerns as far as where we are with the NQs. When we take a look at the NQs quickly, so we've had a pretty good run up in here. And you can see we're right there, 10,951. So it's those key stocks that I'll be looking at. Obviously, Apple's in fantastic shape, but some of the others are in a little bit questionable shape. Apple, as I said, is in very, very good shape, as is to a lesser extent is Facebook. But some of the other ones, a little bit questionable, considering how the earnings came out. Microsoft is one that's certainly in a situation where we could go and pair back, and that's obviously a key driving stock. Google's it came back, but it was very disappointing. Held the trend line. Maybe we'll have a hammer on this daily close, but it's something I'm going to be keeping an eye on. And so it's those particular stocks and be looking at for potential inherent weakness that could end up pushing this NQ lower. And considering where we are, it's not like we're down here. If these negotiations don't go well, then we could find ourselves into some trouble, and then potentially for a pop down. Jane says the high yield debt continues higher. I haven't taken a look at it in a while, but we can take a quick look, see. So come in here for me. I don't know if this one's it. Yeah, high yield corporate debt. There it is. Holy smokes. It is. For a little while, I was looking at all these. We can open this up. I don't think that's right. I don't know unless it is. I haven't looked at it. I had it on TradingView. I have it set up, so I don't think that's correct. I'd have to look it up on that one. But I'll go and take a look at it. But that's a key thing if it's still moving higher. But once again, these are the things I'm looking at as considering how strong we've been, that I'm looking at them for being potentially susceptible. Facebook was key that it held that 250 and closed, really it was key, but I'll be looking if we do slide below 248. Same thing here with Microsoft, although still strong. I thought it could have done somewhat better. Amazon is doing very well, but it's still weak. You can look at the 2 hour chart. We got a gravestone doji, so it's these shorter time frames I look at on the 2 hour chart to kind of give me an idea. If I start to see these break down and then I see where the NASDAQ is, or I should say the NQs, from a relative standpoint, that it opens them for susceptibility, considering that, as I mentioned, we're a little bit weaker. If you look here at Tesla, it's not one of the key stocks, but it's kind of like I forgot what they like to call it, honorary member of the FANGs is what they like to call it. But if you look at it here also, it's kind of lost some of its enthusiasm at this point. Let's pull it here on the daily. So overall, a week close to the week has turned the stock susceptible. You can see here, if you look at it, look, once you got up here, you've been getting bearish here. You see here, and then we fell back. So all these are, opening, and a break of 1394 will generate a sell signal with support coming in at 1275. And on a 2-hour chart, I do have support coming at 1343. But this looks susceptible. And although it hasn't been as involved, although it still is, to the extent it was not that long ago, but you can see it just looks potentially open to slide. And I think it will slide, and probably looking for a move down to 1275. But if we continue to push this, well, once again, it's another one that I'm looking at saying, wow, you know what? These are looking, tad weaker here. Now, this one didn't have, at the same token, the kind of moves that you would have expected, obviously out of Apple, Microsoft, Google, Amazon, Facebook. But once again, it looks a bit susceptible, but it's not one that I'm necessarily honed into as much as I am for the others. That I think that they're in a position where they've had very good blowout earnings and they're not pushing any higher. And once again, they're still in great shape, but I just think that technically they're susceptible here because of their, if you see these blowout earnings, you're like, okay, well, why aren't we a whole lot higher? Amazon is doing very well, but look, once again, we've made this run up in here, and I'll leave it at that. You see how we made it back to 32.52, and now we're just kind of stuck in and now on Friday we made it up there, and we ended up closing the day here at these lows. So it just opens the door for this it's certainly not bearish overall, but it certainly at this point leaves it a little bit stretched and with the potential to pare back. And if you look at the catalyst with all the ongoing negotiation stuff that we can end up fighting with the China and the whole bit, and there's some concerns that the non-farm payrolls may even come in weaker. I've seen someone point out, I think it was Chris Weston, Pepperstone, point out that some people that he had looked at were looking for possibly some losses in numbers. So once again, I try to look at it from a relative standpoint. We're so high in the NQ. What can knock out a couple of legs out of the stool? And that's what I'm looking at. And at these levels and these moves who seem a little bit tired, that I think that potentially we can slide back. Well, with that being said, thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.